most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, or investing in passive multifamily value add opportunities with proven operators is the best way for you to grow your wealth. I'm your host, Brett Swarts, and each episode I am joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. And I am excited about our next guest. He is out of the great state of Minnesota. He's actually a serial entrepreneur who's helped build multiple multi-million dollar companies from the ground up by creating efficient systems that scale, utilizing value-based content marketing strategies, and always focusing on providing exceptional end user experiences. He's a best-selling author, investor, and small business owner who has successfully managed his own personal portfolio of multifamily assets spread across the country before joining forces with his partner in 2019 to create Invictus Capital. Together with his partners, they are driven to help people achieve financial security by providing solid multifamily-based investment opportunities in an environment of trust, transparency, and clarity. Please welcome to the show with me, Anthony Vicino. Hey, Anthony, how you doing?
I'm great. Thanks for having me, Brett.
Absolutely. Would you give our listeners a little bit more about your background and your current focus?
Yep. So my background, I come from a very entrepreneurial, I would say, upbringing where I knew from a very early age I was not going to be able to go into the corporate world. Just a very bad employee. I think Bill Gates said it best when he said, I would rather hire a lazy A player than a hardworking B player, because the lazy A player figures out how to do the job in less time. And that was me. Like when I was working for other people, it was very much get in there, figure out how to do the job as quickly as possible so I could coast the rest of the time. And that's great, but not great for me, because my personality is like, I'm very driven, very challenge oriented. And so I always knew that I couldn't survive in that environment. I wanted to be, operating at my full capacity. So from a very early age, I knew I was going to have to go and work for myself, because there's no time I'm going to work harder than when it's for me. And so I went and I started writing science fiction novels. And then I started a high-rise window washing business when I lived in the Bay Area. And then that led to starting a manufacturing company here in the Twin Cities. And now I'm involved in the real estate side. And so real estate has been kind of like this recurring theme in my life, where in college, I was doing fix and flips with my roommate and his dad. And all I learned from that was that I really hate construction. Like I can swing the hammer, but I can't hit the nail. And so that was off the table right away. I was like, that's not going to work. And then a couple of years later, I started passively investing in quads with a friend who was going out and buying them. And that was really great, because I was just totally passive. I wasn't having to do anything. But it was a couple of years later where I started realizing, like, hey, if I'm on the active side and start to build these systems myself, like the growth potential is pretty enormous. And so I started buying up small properties myself. I wanted to go in there and learn how to operate these things from, I would say, a property management standpoint. Like I wanted to understand, how do these businesses work? And so I did that for a number of years, and then started scaling into larger multifamily. And that's when my partner, Dan Kruger, and I joined forces in late 2019. And since then, we've started syndicating. So we syndicated our first property in January 2020, and we just closed on our second syndication in November of 2020. So despite COVID is still a crazy year, but we were still able to do a couple of really fantastic transactions. So there were still some opportunities out there. And now we're just setting our sights for 2021 and saying it can't be as bad as 2020. Let's go.
Absolutely love it. And we're going to dive into more of that multifamily strategy and what 2021 has to hold. But I want to take one step back for our listeners, helping to get to know you a little bit more. And I want you to go back to the earlier days, right? It could have been the high school, could be college, could be even earlier. And I want to focus on what I like to call strength or superpower. I think they're God-given gifts, but I think we've all been given certain gifts, and these gifts are given to us to be a blessing to others. So I'm curious, what's the one or two gifts that you believe you were given? And how does that help how you help people today?
I have, I think, two superpowers, and one of them is actually also my super weakness. So I have ADHD, which is attention and deficit hyperactivity disorder. And a lot of people think that means that you don't have the ability to focus, which isn't quite accurate. What it really means is you don't always have the ability to control what you're focused on. But when you are focused, you actually go into what's called a hyper-focused state. So this is a lot like what Michele in his book Flow talks about. It's like the flow state. And it can be very, very powerful, because you go into this hyper-awareness, hyper-aroused state where you can just work for hours on the same thing. You can hyper-focus on it. But the problem is that if you're not structured, you can just find yourself focusing on any old thing. So if the paint's drying and my attention gets pulled that way, then I'm now watching the paint dry in a hyper-focused state. That's not helpful. If I'm playing video games, then I'm just going to be really hyper-focused on that. So my life has really been about how do I create habits, structures, and routines around my day so that I'm more likely to be hyper-focusing on things that are moving me forward rather than pulling me back. And one of my gifts then in that state of hyper-focus is I've really figured out some habits and routines that work well for me. And whether you have ADHD or you're just, running on some normal operating hardware, like it can work for everybody. And so that's one gift. The other gift is at my core, I'm a storyteller, whether that's, writing books or it's building businesses. At the end of the day, all we do is tell stories to ourselves and to others. And that could be telling ourselves a story about why this investment's a good opportunity, or trying to convince somebody else why it's a good opportunity. But at the end of the day, it's the core way that we communicate with the world is through story. And so those are my two super strengths and also kind of super weaknesses.
I absolutely love those strengths, and I think that I relate with what you're saying, and especially, I think our strengths can also be our biggest detriment, right? If it's like power or money or anything else that we have or are gifted with, if we're not using it in the right way, it could be a detriment, right, to us and others. But I love how you put that habits, structure, and routines that you've been able to develop and structure in place so that your focus is going in healthy, right places versus other non-productive places. Is that a fair summary?
I think so. Yeah. And, the other side of that is you fail a lot, like daily. That's the goal. In a perfect world, you're always focusing on the things that are moving you forward in life and not pulling you back. But you're not going to operate in that perfect world all the time. So I think you also have to bring a lot of self-forgiveness and be compassionate with yourself, because at the end of the day, we are our harshest critics. And we might think that everybody else is judging us harder, but it's all in your mind. Like, you are the harshest critics. And so for people out there who are maybe really high achievers, and I'm guessing most people listening to that, if you're, a high income earner and you're listening to a show on entrepreneurial journeys, or, how to save on taxes, you're probably a high functioning individual who's driven to go out there and do. And it can be really hard when you're not always moving forward as fast as you want to be. I think 2020 was a great opportunity and a great challenge for a lot of people, because there was a lot of sitting on the hands, not really being able to move forward as quickly as you might have wanted to. So just, be forgiving with yourself, find the pivot that you can put your time and energy into, and then, look towards a long horizon.
Yeah, so much wisdom there. I love all that. Now let's shift a little bit and let's dive right into multifamily investing, what we're seeing for 2021. And give us, at Invictus Multifamily, your guys' vision and strategy for finding value-add multifamily properties in the Twin Cities or wherever else that you might be purchasing properties right now.
Yeah, so we are, we're exclusively focused here in the Twin Cities. We're vertically integrated, so it makes a lot of sense for us to keep things as close together as possible, because we get the scales and of efficiency that way. And so our strategy for finding deals has almost always been through relationships, whether that's relationships with brokers or relationships with sellers, because in the Twin Cities, it's a very, I would say, insular community. A lot of things transact locally. Not a lot of outside investors are looking into the market. It's starting to change a little bit on the larger institutional level investment opportunities, but by and large, you have to know the sellers and you have to be familiar with the brokers. And of those brokers, I would say only 4 to 5 of them are doing maybe 85% of the transactions. So if you can create a good, meaningful relationship with those people, then you're the first ones that they call when they have an opportunity. And that's been key for us.
Excellent. And then what are you seeing right now in regards to just 2021 and opportunities? Interest rates are kind of like all-time lows, right? And you're looking at tons of interest in multifamily, especially in places that are pro-business, and pro-landlord, or tend to be more pro-landlord, right? And you're seeing, in my state I live in, California, you're seeing kind of an exodus to these other states. And I think it was HP, Intel, and Tesla alone in the past 90 days are all decided to go to Texas. So tell us about the inflow into Minnesota and how that might affect multifamily investing.
Yeah, so Minnesota is interesting. Minneapolis and the Twin Cities are often overlooked. We call it a sleeper market. For a lot of people, they don't realize just how much we have going up here. So we have 15 Fortune 500 companies, and they're spread across a pretty wide economic I would say varietal. So we have, 3M, Best Buy, Target, General Mills, and then, compounded on top of that, we have the Mayo Clinic, which is one of the, the number one rated medical institution in the country. And then we also have the University of Minnesota, which is the third largest public education school in the country. And so there's a lot of diversity there. It's not like Detroit where there was, just one big industry. And it's not like San Francisco where, you're when you're in the Bay Area, you kind of focus more on tech and the Silicon Valley angle, or you go down to LA and it's a little bit more, you would say, movies and production and television, right? And so it's not like that. But the problem is, for a lot of people, when they think about the Twin Cities, is it's not a sexy market. Like, we get a lot of snow and we don't ever have explosive growth. You can set a timer to us. Every year we just keep growing at the same rate. It's really consistent and awesome, but you're not also going to get those explosive opportunities like you're going to get in Austin or Phoenix right now. And that's totally fine by us, because when we look back on historical data for like 2007, 2008, and we back test our numbers, we see that, Minneapolis overall, it took a little bit of a dip, but by 2010, it was right back where it was pre the financial crisis. And so it rebounded really quickly. It was a resilient economy. And there's a couple of reasons now that, like, a lot of people are starting to move here. We're seeing actually a strong net migration of individuals coming in, including millennials. And it's because we have a really high median income, close to $70,000 per year, coupled with a low cost of living. And what that does then is people's money goes further. And when people's money goes further, they have more free time to spend doing other things that they want to do. And we have a lot of culture, a lot of outdoor activities for people to do here in the Twin Cities, which then leads to Minneapolis being consistently rated the number one healthiest city in the country, which is a really crazy thing considering we're stuck indoors 6 months out of the year. But those all kind of like come together, those intangible and tangible features that make this actually a really strong market.
I absolutely love how you put all that together. And that's so much knowledge to me, because I don't know much about Minnesota, but want to learn more now. And you've piqued my curiosity for sure. So now let's dive into specifics of maybe some deals that you're seeing, some general returns that you're trying to underwrite to, and how financing has been even more favorable, and how that might change the opportunities moving forward for you into 2021.
Yeah, so we did 2 deals in 2020, and they're very different types of deals. The one that we did in January pre-COVID is your bread and butter heavy value add deal. And that's what we love to see. Like, you go in there, the rents are depressed, at least a 20% delta underneath market rent, and then you're buying it at a good basis. And that deal, the business plan was contingent on re-tenanting it. Like, the tenant population was pretty rough, and the property itself was, I would say, the worst property on the street, which is a good situation to be in, because if you can bring it up to market expectation, then you're the last brick. You're not being held back by somebody else. But that whole business plan is contingent on getting the tenants out, getting new tenants in after doing the renovations. And once the eviction moratorium went into place, things started to go, how are we going to do this? And so it pushed back our plans by a couple of months, but we actually were right back on pace that we had been projecting before COVID. So, like, everything's worked out in the end, because we just had really proactive property management systems in place for working with tenants so that they could navigate the tumult of last year. But what it ended up doing for us is, mid-year, there was a real dry spell of deals. Things were still coming online, but they didn't look very good. People were still wanting pre-COVID prices, and we were wanting a post-COVID risk premium. We wanted that to be assessed in there. And there was still a disconnect between sellers and buyers. And coming into the fall, we started to shift our strategy a little bit and say, okay, we really want to maintain optionality as much as possible. We don't want to be in a position where we are going into a property and we need to re-tenant it, or we need to deploy massive amounts of CapEx on renovations, because we don't know what 2021 is going to be like. We can't prognosticate and look into our crystal ball and say it's going to be better or it's going to be worse. We don't know. So we need to assume that it's going to be both and. And so we want to have a business model that allows us to thrive regardless of what the market does next year. And so what we did was we made a slight flight to quality. We went up to a nice high B-class asset in an A neighborhood. And it was a really incredible opportunity, because the deal itself, the market, the rents in place were about 20% below market. We bought it $125,000 per door, whereas in that market, things are transacting at around $150 per door. So right there, just buying at a really great basis. The tenants were great. The property was well maintained. It was like kind of a unicorn deal. But what we can do is we can go in there, we can keep the tenants in place, and just do a slow roll and bring it up to market rent if we want to, depending on what 2021 does. Or if 2021 actually looks pretty good, we can go in there and deploy heavy capital. We can do the renovations. We can, accelerate our plan back up to market rent even quicker. So we have those options. But when you hear that second deal, you might think, okay, well, that's all great. I would love to buy a property where the rents are depressed and it's in great shape and I'm buying it at a great basis. Like, that's a unicorn deal. How do you find that? And it comes back to the relationships with the brokers that I was talking about before. Because the seller is a guy who's been in this business for over 30 years. He owns 1,400 units here in the Twin Cities alone, and he's just tired. He's old. He's been prioritizing having really easy maintenance. So he gets really high quality tenants in there. He doesn't increase their rent because he doesn't want them moving out. He takes good care of the properties because he doesn't want to have to deal with complaints. And he's just been happy to live in that world. Now that he's older, he wants to liquidate his portfolio over the next couple of years. And he wants to transact with that next young breed of hungry investors who he knows are going to do what they say. So they're not going to come back in the 11th hour and not be able to bring the capital or try and renegotiate at the last minute. He just wants a nice, easy transaction. And so the broker in that relationship actually was a close friend of my partner, Dan, because Dan used to coach him on the nutrition side of his business. And so he went to bat for us with the seller and said, you want to deal with these guys. And so I share that because it's all about being good to people, in your life and relationships in general, because you never really know who's going to come around full circle in 5 or 10 years and be the person who's vouching for you, or, whatever the opposite of vouching for you, I guess, criticizing you. So
yeah,
be cool to people.
Thank you for sharing that. So well said. And I'm curious, I want to dive into that seller. So 1,300 units, baby boomer, own it for a long time. It makes sense that they want to keep it as low drama and low maintenance as possible, because their time and energy has become more and more important, right? With their life, right? Spending time with their grandkids, or maybe starting a hobby side business that they want to get into, they've always loved, or their passion. But what was I want to tie this to capital gains tax. Do you know, did he 1031 since he's getting out of real estate? What was his plan? Because a lot of these deals are 27 and a half years, multifamily, you're fully depreciated. So do you happen to know what he did there with the tax? Did he pay it? Did he 1031?
So he's actually doing a little bit of a 1031 and a DST. So the 1031, he's rolling those into other bigger properties that are in his, over and near him, because he doesn't actually live near these properties. So he's trying to consolidate closer to home. So that's one part of it. The DST is another part of this. So in the past, with, I would say, 2 other transactions we've done with sellers, they weren't really looking to sell when we first engaged them in conversation. They were like, well, what would I do? I don't want to take the tax hit right now. And so the DST, once we put that on the table and they realized, oh, that's an option. I could just, get that cash flow consistently over time. I'm still, deferring the tax liabilities. And that became a really powerful option in our back pocket that we've gone to multiple sellers now. And actually it's a little tricky to explain at first, but once they get it, they go, oh yeah, that makes a lot of sense. And it's a great way for somebody to exit without having to worry about, okay, how are we going to thread the needle of a 1031?
Yeah, very well said. And just to clarify for our listeners, what Anthony's referring to is what's called a Delaware Statutory Trust. It's known as like a 1031 DST, where you're trading your investment property and you are basically moving the equity into interest ownership into a larger portfolio, maybe 2, 3, 4, it could be 5 properties. And there's big institutions that do this, and it qualifies for a 1031 exchange. And it's a great way to be passive, receive consistent cash flow, and still defer the tax. Now, some downsides to that is typically 7 to 10 year holds, illiquid, giving up all control to this new operator. Now, the other seller who we were talking about before, he might set up his own, which is kind of interesting. I don't know if that's what you were referring to, but a lot of the Delawares are for other ones. So those are good fits for folks if they want to stay 100% real estate and they don't mind being illiquid. You do want to be cautious with the cost for those. Sometimes, it might be $1 million you're putting in, but only about $850,000 is getting into the actual real estate, and there's some pretty high fees there. So just be cautious what you're looking at. But that being said, it is a great solution for deferring capital gains tax. Anything else to add to that, Anthony?
No, that's perfect. It's you need to be aware of the limitations, because it's one of those things that it depends on where you are in your life cycle. It's probably not making a lot of sense for a younger guy like myself where I'm at in my trajectory, but for somebody who's a little bit later on in the years and they're sitting on a ton of equity and they just they want to have that consistent cash flow, but not necessarily worry about the headache of management anymore. It transacts a lot like a REIT, but with, the tax benefits.
Absolutely. The only thing I'd push back on that now is you can actually now, instead of going with this big corporation has these high fees, people can sell and move into a deferred sales trust and then immediately invest with someone like Anthony on his own deals. So you don't have those huge fees and also potentially bigger upside. A lot of the Delaware deals I've found, they're around a 5% return, right? And they're more newer properties, which is fine. But if you're looking for value add and maybe double digit returns, right? You want to work with more of a local, smaller, mid-sized to private equity. We just did a deal out of Georgia, $7.6 million sale, and the gentleman moved the funds to the Deferred Sales Trust and instead of doing it in Delaware. And one of the reasons was he knew a gentleman who has over 100,000 multifamily units under management or ownership over the last 30 years. And he was able to put it into there, and they're looking for much, much better than just around the 5% return. It's probably going to be 10, 15, maybe 18 to 20% IRR over a 5-year term. All that being said, there's more options. You can learn more about that at capitalgainstaxsolutions.com. That being said, Anthony, we are running close to end of time. Are you ready for the lightning round?
Let's do it. Yeah.
All right. So what project are you working on right now that is the most important to you at the moment? And what impact do you envision having for you or your clients or your partners?
Right now, we are working on a book. So Passive Investing Made Simple. We're publishing that in conjunction with Jake and Gina, and that's going to be coming out in June of this year. And I'm really passionate about that project because most people aren't aware just of like how accessible real estate investing is for them. If they're a high net worth individual or they have a job that they love, they want to be invested in real estate, but it feels daunting, or they think that the only way they can do that is if they're actively managing it. There's just not a ton of information out there for people who want to be a professional passive investor where that's just what they do. And so this is hopefully a resource that can help to shed some more light on that as an option for people.
Excellent. Yeah. Passive Investing Made Simple. And, when that book gets closer, we'd love to have you back on the show to share about that book and do a little mini book tour if you'd like to come back on.
Yeah, I'd love to.
Awesome. Next question. What's the number one book that you've read or recommended in the past year?
Ooh, 2 books. One is Anti-Fragile by Nassim Taleb. It's a fantastic book about optionality and understanding how to build systems that aren't just resilient or robust, but that actually benefit from when things go wrong. And so I would definitely recommend that book. And then my go-to recommendation always is Meditations by Marcus Aurelius. It's just an insight into, the last great philosopher, emperor of Rome, and his personal journal. And there's a lot of timeless lessons to be learned from there.
Love it. Next question. What's the biggest challenge facing multifamily syndicators as it pertains to raising capital?
I think visibility. Honestly, I think a lot of times, obscurity is the great difficulty for most people, whether that's on the deal flow side or the capital flow side. You need both of those, and they need to be synced up perfectly, because if you have too much of one or the other, then you're not firing on all cylinders. And so getting in front of enough investors or having enough meaningful conversations, or really putting yourself in the shoes of the passive investor to understand what their needs are so that you can understand how you can best serve them. I think that's probably the biggest issue.
Excellent. Let's see. What are you most curious about right now?
Right now I'm reading a lot of ancient texts, things like some poetry from Rumi and the Iliad and Homer's Odyssey, like really old things, because I'm really interested in how, thousands of years ago, people were dealing and wrestling with the same issues that we're dealing with right now. And, I think those old questions are some of the most important questions to sit and ponder on. So that's what I'm thinking about a lot these days.
So much wisdom there. I love that. I gotta get your book list, because that's gonna expand my horizon here. So best real estate deal you've ever done?
Well, each one's pretty good, honestly. I think the very best one, in terms of sheer turnaround time, I bought a triplex for $246,000 and then refinanced it 9 months later for like $125,000 more than what I bought it for. And I put nothing into it, put zero work or energy. It just appreciated overnight, and then took that money out of the refinance, rolled that into the next thing. So in terms of like the number of hours put into a project and returns on the backside, like that was definitely the winner.
That's definitely a lazy A player making it work on a triplex, right?
Yeah, honestly, but that's what got me out of the small stuff is I hated how arbitrary the valuations were. I was in no control over it. And that's what moved me into the larger multifamily. I wanted to be rewarded for the merit of the work being done.
Yeah, very well said, which fits into why you're an entrepreneur and a business owner and rather than a W-2 employee. Absolutely love
Mhm.
it. Last question, and this will kind of encapsulate the interview, hopefully, for our listeners, but also bring us to the really just the end of the interview. So after all of your nothing profound there, after all your success though, and after all of what you built and Invictus multifamily that you're building now with your partners, how do you stay centered in your values, and how do you stay encouraged to reach for new goals?
It's all about finding purpose and meaning in what you do. And if you find purpose and meaning in what you do, then you wake up every day energized. And if you're not waking up every day energized, it's probably because you don't know the meaning behind what you're doing or you don't see the purpose. And so you need to find those. And if you can't find those, then you need to go find a different activity. You need to go find that because life is too short to be spending on things that don't spark your soul with joy. So if you're not waking up every day excited to go tackle the day, you need to change that because it's the only life that you get. And you're wasting it if you're sad and depressed and lonely, or, it's just, you feel unfulfilled.
Very well said. And for our listeners who want to get in touch with you, Anthony, what's the best place for them to find you?
Yep. Check us out at invictusmultifamily.com. We have a bunch of free resources over there right now for passive investors that want to learn more about how to get involved in real estate without having to deal with any of the work. And then also we have a podcast called Multifamily Investing Made Simple, which is exactly what it sounds like. We try to take the complexity out of real estate so that people can realize, hey, this is accessible to me as well, and regardless of where you are in your life.
Beautiful. Well, I want to thank you, Anthony, for being on the show, for sharing a bit about your story, some wisdom and some inspiration here for us to invest in multifamily and to find purpose and meaning in everything we're doing. With that being said, I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options, not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, or perhaps even a Delaware Statutory Trust for some circumstances, or finding someone like Anthony, where you can invest passively into multifamily value add opportunities, is the best way for you to grow your wealth. Please rate, review, subscribe. Go to capitalgainstaxsolutions.com if you want to learn more and get a free consultation. Download our free ebook. Or if you're a business professional, commercial real estate syndicator, operator, financial advisor, you can go to experttaxsecrets.com and learn how the Deferred Sales Trust can explode your business. Thanks so much, everybody, for listening. We appreciate